Hello, traders. Gary Wagner here. Approximately 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, first day of April 2021, and this is the Daily Report for Gold and Silver. I apologize for not doing an intro in person. We are rebuilding the studio, and I think you'll be pleased with the results, which we will reveal on Monday. Gold showing some nice gains following yesterday's gains, currently at $17.30, up $14.70. There are a number of multiple technical indicators that are suggesting that the proper action at this point is to go long both gold and silver. And on today's shortened show, we will attempt to explain both of the metals. Traders, the first candle we are looking at is a daily gold chart, and it does contain a pretty large amount of candles in terms of the data set. It starts really at the beginning of March when gold bottomed at 1,450 up to the record top. We do have that same Fibonacci retracement in there. Now, here's what I'm finding interesting. If we look at these recent lows that came in April, May, and June of last year and follow that through to current pricing, what you'll see is that we have now hit a series of a double bottom at approximately that price point, and that is this bottom right here and this bottom right here. Now, the last couple of times we saw gold trade to this price point back last year on the first three occasions, meaning the low that was hit here, the low that was hit here, and the low that was hit here, it was short-lived, only trading to about 1750. However, fourth time was the charm in the case of gold, because when it hit that low for the fourth time, that was the beginning of a dynamic rally taking it to the all-time record highs. Now, once again, we've had a series of double bottoms here as well as here, and we can identify a strong candlestick pattern in silver and a variation of a strong key reversal pattern in gold. And let's first take this first pattern that we've identified is a variation off of a simple two-day pattern simply called an engulfing bullish. We talked about it on yesterday's show. The reason it is a variation is in its most truest form, you would need to have had this green candle open below the close of the red candle. Of course, the close is the bottom price of the red candle, and then close above it. While it closed above it, it did not open below it, but very, very near to it. And that's why I believe it's a valid signal and a strong indication of a key reversal based on the fact of where it occurred, that we have had multiple occasions in which gold has traded here and bounced off, and today we received a confirming candle. Now, while it is still early, we will send out a special trade alert recommending the initiation of long positions later on today or prior to the open of the market tomorrow based upon this activity. Market is just about to close now, and I want to see a solid close above the highs that were achieved yesterday, and then some follow through in Australia just to be on the safe side. Therefore, traders, await a trade alert to go long gold. Let's take a look at silver. Traders, not only is silver trading higher in terms of percentage gains, up 2% when compared to gold's rise today, 0.86%, but it had a strong pattern called a piercing line, which confirmed today, and we have other technical indicators that are in confluence with the real high probability that we're witnessing some sort of a key reversal. And let's take a look at those charts right now. We are looking at a daily chart of silver futures. This is the continuous contract basis May currently. We can see that although the low that came in did not match these bottoms that came in October, November, and December of last year, it in fact is a higher bottom than this last bottom here as this market moved up and back down. When we enlarge this, you will see a couple of things that to me are extremely optimistic. First of all, we can identify a simple two-day pattern called a piercing line. Let me go ahead and enlarge that so that you can see it. A piercing line is simply defined as after a downtrend, you get a large red candle. That would be this candle right here. And that is followed by a green candle that opens below the closing price of the red candle, which would be this line right here, and then closes at or above the midpoint of the prior candle. We can certainly say that we've met that criteria. That must be followed by a confirming candle, which should be a long green candle, higher high, higher close, higher low. And what is very significant is twofold. First, if you notice there is no upper wick, which means that it traded and closed near the high, which is significant. The second indication is that it now is trading above its 200-day moving average, and that's the first occurrence of that in quite some time. It is for that reason that we will send out a special trade alert recommending the initiation of long positions in silver just following the report being released and Australia trading for an hour or two. So please be on the alert for a trade alert. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review, which will be the weekend review. Bye-bye.